Pricing a DSCR loan, debt service credit ratio. That's a DSCR loan, sometimes known as an Airbnb loan or vacation rental property loan. So let me show you some live pricing right now. This would be a wholesale price. You're doing a purchase, 30-year fixed loan term. We're doing a loan amount of $360 and a loan to value of 80%, meaning you're putting 20% down. You have no mortgage history of bankruptcy, late payments, anything like that. So that's what these two are all about. This is priced for a U.S. citizen. We're starting off with a FICO score of 720. And the ratio, the amount of rent versus the payment, is going to be equal 1% up to 1.9%. Debt to income is not part of this loan. You're doing it based on the value of the rents compared to the debt, not your personal debt to income, paid stubs, etc. All right, we're doing a 30-day lock. It's borrower paid. Usually when it comes to investment loans, we're talking a fixed percentage that you are going to pay as a fee for doing this. And then we have here a 3-year prepaid penalty. That's very common in business loans. It's extremely uncommon in personal loans. So we're starting with the 3-year. We're not going to check waiving escrows, even though most of the time it makes sense to do that, but I just don't want to complicate the numbers. Admin fee, that raises your interest rates a little bit so that you don't pay that as a line item. First-time home buyer, we're going to skip that, even though you can be a first-time home buyer on an investment property, even though you're not actually buying it. Anyway, side note. Interest only, that ends up being your payments are less expensive by a little bit, but it doesn't seem to be worth it, in my opinion, most of the time, because you're not getting ahead of things. You're pricing too tightly. You're betting that everything will be perfect. And I think you should bet realistically. I am checking short-term rentals. So this isn't an annual lease. This is the weekly rentals. So when I did this, I got a rate of 8.99 on this particular lender. Next, we're going to monkey with some things and see what happens to the rate. So if I go to a 762, that rate comes down and the monthly payment comes down. If, let's say, this is a money-making property and you're going to get greater than 1.25%, your rate comes down again. So that's a DSCR where the income is 125% or greater than the debt, the principal, interest, taxes, and insurance. If, however, the appraisal, and this is one of the reasons I'm doing this video, is because we can't tell you what the interest rate is until after the appraisal. So if the appraiser goes out and says, hey, this has got a lot of empty time, yeah, you can get $12,000 a month during season, but you're going to get zero for 8 months out of the year, and it comes out to less than 1%, then whoa. Okay, figured that out. So if it's going to be less than 1%, they are not allowing you to go to 80% loan to value. They want 75%. And then here's the pricing if you put 25% down. They want your skin in the game. So you get a lower price if you put more money down, even though the income isn't as great. So if we have 25% down and we're at the 1.25, what a great rate. So it really depends on what the appraisal comes out at and if you're fitting all of these criteria. They will go down to a credit score of 660, but you can see the difference in the rate. I hope this helps and look forward to doing your loan for you and having you make money. We don't look so much at the rate. What we're looking at is the monthly payment compared to the amount of rent that is coming in. Thanks. The previous lender was really easy to use and show you the difference of different elements. This is more of my preferred lender, and it's more complicated to understand how they do things, but I want to be fully transparent and show you how different lenders price differently. So we'll start off with this is going to be put into an LLC. It's a conventional loan, 30-year fixed. It's a home purchase price 450, loan to value 80%, loan amount is 360. It is an investment property. We're doing the 3-year penalty again. We put in short-term rental. Some lenders allow first-time investors, others do not. This particular vendor or purchaser is a experienced investor. The debt service coverage ratio, 100%, a 1-to-1 value. It is a condominium, which they do a little extra premium on that, which I'll show you in a minute. It's an attached property. We have the Collier County zip code, and we're using a qualifying credit score to start of 740. Borrower income, it really doesn't matter because this is a debt service credit ratio loan based on the property, not on your income. The buyer is not a first-time home buyer. It is a correspondence loan. That just means that NEXA Mortgage is the one working with this particular lender who is UWM, and NEXA Mortgage works with multiple lenders, and so that doesn't really matter to you. There is the option that the lender, we can do it brokered, and the lender is the one who's paying the fee. But again, with commercial investment properties, normally it's the buyer who is paying for the lending services as opposed to getting a higher interest rate and having the lender pay for the fees involved. It's not over 45% debt to income ratio. That doesn't matter on a DSCR loan anyway. I don't have to fill in these numbers. Yes, they're self-employed. We aren't doing a bank statement, but we'll put it in here anyways. 12 months reserve is pretty standard. There are 2 borrowers, even though it's an LLC. We're using both borrowers' credit scores. Some lenders will take the middle of the 2 individuals' credit scores. Other lenders will only require 1 with an LLC. And then we're not waiving taxes and insurance just as a starting point for prices. With UWM, this lender, it doesn't matter. It doesn't change the price whether you waive them or not, but I'm just going to leave it there. And third-party processor, we're not influencing what the rate's going to be. We're just going to get a quote. So when I do the quote, it comes up with DSCR pink 3-year penalty. And this is the interest rate that they give. They think this is the best option. They have different DSCRs, different colors, blue, yellow, but we're going to go with pink. Now, it gave me this rate based on all the parameters I put in, but when I click on it, I can look at more detailed rates. So here, 1.46, that is a final price of 0. No fees are being paid and no credit is coming back. I wanted to get a 6.25 rate, you would be paying an additional almost $15,000 in closing. If you wanted to do an 8%, you could get almost $10,000 back at closing, basically the reverse of paying down your interest rate. So let's change some of these parameters. And if we go to, I think the one that showed the biggest difference was the credit score. So let's go to an 800 credit score and let's do 75% loan to value. And let's see what a difference that makes. So we hit get quote. Do. And the interest rate goes down to 6.677. So if you paid an additional $5,000, you could get a rate of 6.375. If you needed a little extra money back at closing, you could get almost 11,000 back at an interest rate of 7.5. Now that might be an interesting way to do it, because if you're putting an extra 5% down, you might want a higher interest rate so that you can afford the difference between the 20% down and the 25% down. So that's just a little tidbit. Hopefully this helps a little bit. It's so complicated, but I want to be fully transparent on how things work and how different companies price differently. There's an old joke, and it's April 2026. So in honor of tax time, let me tell you. If you ask a teacher what 2 + 2 is, their answer is 4. If you ask an engineer what 2 + 2 is, his answer might be 3.9 to 4.5. If you ask a statistician what 2 + 2 is, her answer might be between 3.98 and 4.005, but only about 97% of the time. If you ask an accountant what 2 + 2 is, his answer, what do you want it to be?